I don't know why, but when it comes to real estate, everyone is buying into this idea that the market is going to crash. The sky is falling, doom and gloomers were wrong about 2020. So far, they're wrong about 2021. And the data is strong that they will be wrong again in 2022. On this video, I'm going to show you how the real estate market is not going to crash anytime soon. Coming up.
Go to 8weekacademy.com to claim your free copy of Jerry Norton's most popular training. In it, he reveals his blueprint for making $100,000 per year with real estate.
If this is your first time here, my name is Jerry Norton. I've been a full-time real estate investor now for over 17 years. Amongst other things, I specialize in flipping houses all across the country, and I've helped thousands of new investors get into the game of flipping and create 6 and even 7-figure incomes. Now, if you want to learn how to flip houses so that you can live your dream life, be sure to subscribe and click the bell icon to get notified when new videos are released. Going into 2020, we had an extremely healthy real estate market with low inventory, strong demand, and low interest rates. Then the pandemic happened and everyone freaked out about real estate. The internet, especially YouTube, was flooded by the so-called experts claiming the real estate market was going to crash. It's going to be 2008 all over again. Looking to capitalize on fear and uncertainty, those predictions continued all through 2020, but it didn't happen. Not only did the market not crash in 2020, U.S. housing was the most outperforming economic sector in the world. So what did all the housing bubble experts do? They just moved their predictions to 2021. Now, because of course, once forbearance and foreclosure moratoriums end, then the market will crash. And here we are almost halfway through the year with no crash in sight. But wait, now it's probably not going to happen in 2021, but for sure the market will crash in 2022. Now, I have maintained all along and even put out several videos stating that the real estate market was not going to crash, and that is still my position. Let's discuss several reasons why, and then look at some hard data to support my conclusions. Let's talk about jobs and unemployment first. Many of the doom and gloomers used all of the lost jobs caused by the pandemic as a reason why the market would crash. Now, all those people who lost their jobs would, of course, default on their home loans, and we'd see a tsunami of foreclosures, thus crashing the market. And their argument why it hasn't happened yet is, of course, because of loan forbearances and foreclosure moratoriums, which postponed the impending crash. But that theory just doesn't hold any weight for 2 major reasons. Number one, most Americans have a lot of equity in their homes. A recent report shows that the average homeowner with a mortgage has $177,000 in equity, which means if a homeowner loses his job, he is not going to walk from his home and let it go to foreclosure. Does that make any sense? No, he is going to sell it and realize his equity. The second reason is that jobs are rebounding quickly from the pandemic. If you take a look at the statistics in February 2020, just prior to the pandemic, there were 152,523,000 non-farm payroll workers, which isn't all the workers in America, but most of them. Today, in May 2021, we have 144,308,000 non-farm payroll folks working. With or without COVID restrictions, employment continues to go back up, and all of the indicators are showing that we'll be back to pre-pandemic February 2020 employment by September 2022 or sooner. And that growth has been happening despite the ongoing pandemic restrictions. Now, the reality is the doomsdayers don't want to face the fact that the growth of the job market will continue to decrease the number of homeowners participating in forbearance programs. Since the beginning of the pandemic crisis, homeowners participating in forbearance programs fell from nearly 5 million to 2.2 million in 1 year. Now, some of these housing bears predicted that 10 million or more homeowners would take advantage of forbearance programs, but the number has consistently gone down instead of up, as we can see in this chart from Black Knight. Now, the other argument that I've heard from the end of the world folks is that there isn't enough labor to meet the new construction housing demand. Now, while it's true costs for labor and materials have gone up significantly, there is more construction labor in the market now than pre-pandemic. It is going to cost a lot more, but I'm not buying into the idea that we can't build homes due to a lack of labor. The reality is that the naysayers have it all wrong when it comes to the real estate market. We are not in a housing bubble. The market is not poised to crash. In fact, we have the best housing demographic ever recorded in U.S. history in the years 2020 all the way to 2024, combined with lowest mortgage rates ever recorded in history and the highest home equity ever recorded in history. So this idea that the housing demand will collapse is just ludicrous. Prepare for real demand to continue and home prices to keep rising. My personal belief is that if you're sitting on the sidelines right now waiting for the market to crash, you're gonna miss out on an opportunity of a lifetime. I love the old Chinese proverb, the best time to plant a tree was 20 years ago. The second best time is now. The same is true for real estate. Me personally, I'm doubling down and upping my game even more than ever, and I can help you get started right now. To get your first or next real estate deal in the next 30 days, be sure to get my Quickstart Kit, and I'll give that to you for free. Just go to myquickstartkit.com. The real problem we should be worried about is hyperinflation from the federal government's out-of-control, reckless spending, which will have severe consequences. Now, I agree with economist Peter Schiff, who explains that printing more money to pay for more spending devalues the dollar and creates inflation, which really means you have less buying power. Simply put, inflation is nothing more than a tax hike on everyone. Oh wait, I thought the federal government was just going to raise the taxes on the rich. Nope, that's just what they want you to think. Anyways, real estate has definitely made some significant shifts as a result of the pandemic, and you need to know how to adjust if you want to thrive as an investor. So next, I want you to watch a video where I break down the 5 trends that you should be aware of right now in real estate. Watch that now, and if you haven't yet, be sure to subscribe to my channel. With over 700 videos, this is the #1 channel on YouTube for all things flipping, and I'll see you on the next video.